Which types of insurance make sense by your stage of career? In my personal opinion, the insurance companies themselves, no matter which type of insurance it is, do a terrible job of explaining this and trying to make any sense of it whatsoever. But my guest today does a very good job of it. I can attest to this personally, and he's going to see if he can help make some sense of it for you as well. I'm Carl White, principal at Mark Advisory Group, which is a healthcare marketing agency, and I'm also the host of Practice Care. The mission for both is the same, and that's to help private practice owners stay private. Usually that's what they want anyway. And care is better when the provider owns the practice because that's when they're going to have the most freedom to make the clinical decisions they think are best. It's not quite the same when somebody else owns the practice. Eventually, not totally unjustifiably, but nevertheless, eventually their agenda starts to creep in. It gives the provider more to think about. Let's just keep all that out of the way and keep it private. My guest today is Drew Powers. Drew is the founder of Powers Financial Group, a registered investment advisor. He specializes in advanced insurance and investment strategies for doctors. He's 100% independent, which means he doesn't work for any investment or insurance companies, which then means he's able to give unbiased advice that is most beneficial for his clients. He started his career in 2001 as a market maker on the Chicago Board Options Exchange, where he managed trading portfolios comprised of hundreds of equity and equity index options listings. In 2008, he transitioned to the role of financial advisor and investment advisor representative, where he helped clients develop individual financial strategies. And now at Powers Financial Group, Drew leverages his stock and options trading expertise and his financial advising experience to help clients increase and protect their wealth. Drew, you got a lot going on. Thank you for taking on the tall task of demystifying insurance for us today on Practice Care.
Thank you so much for having me. I'm honored to be here. I need you to introduce me everywhere I go now, Carl.
You know what?
Fantastic.
If that's the easy part of this equation, because then you have to come in and explain insurance. So I'll take that all
Right.
day long. Before we get into that, I want to start where I start with each and every guest. The bio that I asked for that I just read was just necessarily short. Fill in the blanks, the gaps. Help us get to know you a bit better. Just tell us more about yourself.
Sure. Well, personally, which is really the stuff I care about more, I'm a proud father and husband, and I love to downhill ski with my kids. And if I could figure out a way to make that my profession, I would. But unfortunately, that ship has sailed.
Okay. Okay.
Yeah. And then professionally,
yeah.
So all of this is going to go way back to a job I had in college. So I was a blackjack, poker, dice game dealer at a casino in college.
Okay.
And it was really interesting. I was also an econ major and kind of a math nerd. And it was so interesting how they devised little systems or tricks or whatever they could do to get people to put their money down in a game they couldn't win. And usually these things created a false sense of confidence in the player. And I love to be the guy who said, it doesn't matter if we just rolled 10 blacks in a row. You're still a 3% underdog on the next roll. But boy, they'd put their money on red all the time, So I always love that, watching that happen. And that led me to working on the trading floor, because the trading floor is really all about managing risk. And that was a really exciting job for a young college grad. And, you make a trade in an option, you hedge it with a stock position, but now you have this position that has its own risk characteristics. And it was, okay, there's 5 or 6 variables here. How do we manage them all as stock prices move and volatility moves? And, when I wanted to get out of that, I thought, well, how do I leverage this experience that I have? And what was really missing in my life was helping people. And that's how I got into financial advising. Okay. So that's kind of the background in a nutshell.
Okay, cool. So let's get into it. And before we get into insurance by stage of career, I just want to ask a broader question. What's a good way to think about insurance as a part of wealth building? I just find that, and I'm guilty of this too, I just view it as something separate, and maybe I shouldn't. Everybody can conceptualize auto insurance as, protect your wealth, because if you have a bad problem, then it's insurance company paying for it, not you, although your premiums, whatever. But how do you think about this?
Right.
They get it back eventually, right? So,
right.
how do you've said to me offline, insurance can be a part of an overall wealth building approach.
Mhm.
Help us with that.
So maybe let's reframe the thinking of insurance. Most people, if you said, what is insurance? They'll say it's a necessary evil,
Yeah.
right? There's nothing evil about it. This is, you should think of it more as um, think of it more as an asset, right? The moment you have purchased an insurance policy, you have an instant estate,
Okay.
right? So, yes, in the terms of life insurance, you have to pass away for that estate to be realized, right?
Yes.
And nobody wants to do that, but things happen.
Mm-hmm.
And, this is also an asset that you own and later can sell. And I don't know if we're going to get that deep into the conversation today, but
Mm-hmm.
it is an asset just like anything else. It's just, what's the difference between your home and your stock portfolio? Right? Insurance is different than those things too.
Mm-hmm.
It's just a different asset, and it actually can be used for wealth building, especially if
Okay.
you do it right.
Yeah. And that's where I think, I'm thinking back to some previous over the years attempts to explain how insurance can work that way. And that's just, this very large table of very small numbers gets whipped out and put in front of me with this incomprehensible 6 or 7 paragraph explanation and followed on. So do you see it? And I sort of nod politely and say to myself, I didn't see it the moment the table came out, let alone
Right,
whatever you said. Yeah. So I'm hoping
right.
some demystification happens today. So the simplest way is an insurance policy, as long as it's one you own, so not like term insurance, but like say whole life or whatever the other ones are. It's an asset just like any other asset. And so
Sure. And I would even say term insurance is an asset.
okay.
It's maybe, term, right, has a certain term of time that it is good for, but
Mm-hmm.
there's still flexibility in there.
Mm-hmm.
And it doesn't matter, if you were to pass away, it
Mm-hmm.
doesn't matter if it's term or whole life or what,
It's true.
it pays out.
Yeah.
So there's still value there too.
Right. Fair enough. That's a good point. That's a good
Mhm.
point. And so if your total estate, your total wealth is comprised of the sum total of the assets you own, then there you go. So it's another
Yeah.
asset with different. Okay, good. So let's get into the career stage. So
Mhm.
kind of simple questions. If you think about, doctors and dentists and providers in the early stages of their career, what kind of insurance makes sense?
Sure. So I would take this all the way back to medical school, dental school,
Okay.
residency, especially in residency.
Mm-hmm.
Every resident should have disability insurance.
Because.
And for a couple of reasons.
Mm-hmm.
One, every viable carrier offers residents some kind of discount when they purchase it, either while they're in training or for a very short time thereafter.
Mm-hmm.
And with a lot of those carriers, that discount is contractual and permanent.
Okay.
So you buy a small policy in residency, you get a contract, you start practicing, you want to cover more of your income.
Mm-hmm.
You get to purchase more inside that policy and you still get the resident discount even though you're practicing.
Okay.
So that's that's important. And also,
But why
in
have
general,
disability at all, discount or not? I mean, I have it. For me, I know, but why?
sure. Well, and I
Yeah.
think in the medical and dental world versus some of the other professionals we know, like this is a well-established need.
Mm-hmm.
The smallest thing can keep you from practicing.
Mm-hmm.
The silly example I always use is you slam your hand in the car door.
Mm-hmm.
How often does that really happen, right?
Yeah.
But
Yeah.
you slam your hand in the car door, you can't hold your instruments, you're done practicing the way you were practicing.
Mm-hmm.
Now, for you and me, Carl, that's just a bad day, hand in a sling, but we'll get back to typing emails
Right.
soon enough.
Right.
For physicians, surgeons, dentists, anybody who's doing hands-on patient treatment, that could be career ending.
Big
And
deal.
that's a
Yeah.
career you spent a lot of time and a lot of money to obtain.
Mm-hmm.
Where else are you going to make that money?
Mm-hmm.
And so disability insurance, maybe I should back up a little bit. Disability is the worst named product in the history of mankind, right? I
That's a
like to
bold
call it,
statement.
well, it is paycheck insurance, right?
Yeah.
If you are sick or injured and can't earn a paycheck, This comes in and replaces that paycheck. It's paycheck insurance.
Okay. So disability at early stage.
Hmm.
Any other
Hmm.
types of insurance you would say?
Yeah. And then I would say everyone, whether you're, it's obvious if you're married and have kids that you probably need some life insurance.
Mm-hmm.
But if you're single and a confirmed bachelor, it doesn't matter. Have some life insurance.
Mm-hmm.
And I would say term life insurance, it's really inexpensive.
Yeah.
I anecdotally, I like to ask every group of residents that I'm in front of, how much do you think this costs? And what they say back to me is usually 3 or 4 times what it would really cost them.
You mean like
You
a
know,
term?
like a
Yeah.
term policy, right?
Yeah.
And you're going to make a lot of money when you start practicing.
Yeah.
A $1 million 20 or 30-year term
Nothing.
is very affordable, even
Mm-hmm.
at a resident or fellowship salary.
Mm-hmm.
And the advantages that it could have later on in life
Mm-hmm.
are numerous.
Mm-hmm.
And all things being equal, you're
Mm-hmm.
as young and as healthy, most likely, as you're ever going to be.
Yeah.
Lock it in now before you have time to get sick or injured.
Yeah. Yeah, I remember when we I think I got it when I first got married and maybe we had our first kid and we sat down with
Hmm.
the agent and I was like, I don't know how much to get. He's like, well, here's what we figured out. It's income replacement should you go. So let's think about there's
Yeah,
a few big variables that are definite, and so we arrived at a number. I said, well, that makes sense. And yeah, it was very little. It was very little. It just,
right, right.
automate the
And
payments and move
again,
on
when
with your
you're
life. Yeah.
yes, yes, and when you're in training, the budget is limited. I get it. We're
Hmm.
not trying to solve your lifelong insurance need right then and there, but
Hmm.
let's put something in place
Hmm.
so that if something happened to you where you became less insurable or
Hmm.
uninsurable,
Hmm.
you have something.
Yeah. Yeah.
That's the goal. Have
Yeah.
something.
Yeah. Now, what do you say to people who, because the odds that you slam your hand in a car door, the odds that you get into these types of situations, they're rare. That's the reflex. What do you say to people when they say, but that wouldn't happen?
Yeah, and again, I use this silly example of slamming your hand in the car door. And
But
again, how often does that happen?
yeah, but
The vast majority of claims are from illnesses.
okay.
And if you're a doctor and you've worked in your hospital rotations, everybody there had some kind of illness,
Mm-hmm.
right? And that's the vast majority of claims, and it can happen to anyone at any time.
Yep.
And I don't see this again. I don't see this as much of as big of a hurdle
Mm-hmm.
with medical and dental professionals because I think it's kind of been beat into their head.
Yeah.
One, by those they're learning from, those that they're working for, and I think the insurance industry has done a good job
Yeah.
of informing this population, right?
Yeah.
Less so with other white collar professionals, I think.
Yeah. I mean, I think of it as disability. We have an umbrella policy on our home, and I probably have more insurance than the average. And
Hmm?
I hope to God I never use any of it.
Right.
I mean, I don't want to get robbed or have a fire in my home so I can make a claim on the umbrella, which sits on top of my homeowners. Of course not. But the point is, oh, it's so expensive. Well, time out. Um, if that rare event happened, it would be more expensive not to have it. And think about, that's the whole point of insurance is to backstop a big bad financial problem that you hope
Hmm.
and will likely never happen, but that's why you do it anyway, because if it did, the pain that it would cause would be massive. And
Right.
that's why you do it,
Right. I think of it as like a fire truck. I would be thrilled if the fire truck at the local fire station never pulled out of the garage
Yeah.
because that means nobody's house burned down.
Right.
But houses do burn down. People
Right.
do have medical emergencies, right? And so then we're really glad that that really expensive fire truck is there.
Yeah.
And the good news is your insurance doesn't have to be nearly as expensive.
It's interesting when you say that, because I was just starting to think, we pay taxes towards the local fire station. Should we rebel and
Mhm.
say, come on, there's so much fire suppression built into building codes. It's so
Right.
rare. We don't need to, what a waste of our tax money to have to pay for fire. People would have
Right.
the opposite, but well, we have to have that. Of course we have to have that. It's
Yeah.
the thing. You're paying taxes towards a fire station that you hope to God you do. It's true. It's a really good point. So, okay, so that's early stages. We kind of move
Sure.
towards late, early, or mid-stage career. Talk more about, tell us about, in your opinion, what types of insurance makes sense at that stage.
Right. And I'm going to limit this to kind of the life, disability, long-term care because that's what I deal with.
Okay, fair enough.
Clearly, our medical and dental professionals need malpractice.
Yeah,
You need
business,
umbrella
cyber.
policies, right? You
Yeah.
need all of these other things. But let's just talk about your own personal and maybe what you need for your practice.
Yeah, maybe it's the policies that are maybe more directly correlated with wealth building, your sort of estate, etc. Fair enough.
Right.
Good.
Right.
Yeah.
So I would recommend everyone get as much insurance as they can early on.
Okay.
If the insurance company will give you 15,000 in monthly benefit for your disability policy, grab it. Grab it while you're employed by somebody else because the minute you purchase your practice, you become a practice owner. And now they want to see a history of successful earnings before they're going to increase you.
That is so true. That happened when I
Yeah,
switched. Yes.
right,
I got
right.
it through my company and it was like ridiculously dirt cheap. I'm like, why wouldn't I? And then I flipped and I was like, oh, this is different math now.
Yes, yes, exactly.
Yes.
So, do that. You're out of training, you're earning
Hmm.
more, you're earning more in a month than a lot of Americans do in a year.
Hmm.
Get a good bit of
Hmm.
term life insurance. It's very inexpensive for the death benefit it provides.
Hmm.
You have to think if you're that 30, 35-year-old new attending or aspiring practice owner
Hmm.
and you're making 300 grand a year and you're going to work for the next 30, 40 years, that's a huge income potential. I'm not
Hmm.
saying you have to have 10 or 12 million dollars of insurance, but
Right.
you need now more than one or two.
Yeah. Okay.
So yeah, yeah. So for that new person, let's bulk up a little bit in our
Okay.
protection.
Okay. So that's life. What about the other
Mhm.
types?
Yeah, the disability again, bulk that up, especially while you're working for somebody else, because it
Hmm.
doesn't matter if you change jobs.
Hmm.
They're just going to go look at your paycheck. It doesn't matter as long as you already have it, I should say.
Right.
And then, for high income earners that most of our medical dental professionals are,
Hmm.
I don't think it's too early to start thinking about a long-term care plan
Hmm.
because as we live longer, it's just a matter of fact, we grow more frail.
Hmm.
We're going to need more care.
Hmm.
And the medical system is really good at keeping us alive. It's not always as good at keeping us healthy. And as you age, you're just going to need help.
Yeah.
And who lives the longest are people who have money to spend on their medical care during
Yeah.
the rest of their working years.
Yeah. So you're talking about
Um,
long-term care insurance. Just for those who may not know what that is, just tell us what that is.
sure. So this is insurance that it's not tied to your disability, right? You slam your hand in the car door, you're not probably going to qualify for long-term care payments.
Hmm.
It certainly isn't killing you. This is when you start losing your ability to perform activities of daily living,
Right.
dressing, bathing, toileting, transferring, right? Everybody listening to this podcast knows more about activities of daily living than I do.
Hmm.
So as you start to lose those and you
Hmm.
need medical help,
Hmm.
this is when that policy kicks in.
Yeah.
You probably are not going to have a claim at 30, 35, 40, but
Hmm.
it might make sense to take a little bit of money and start setting it aside
Hmm.
for some kind of long-term care coverage. Again, we're not trying to solve the problems you're going to have at 80, 85, 90 when you're more likely to have a claim.
Right.
We're just starting to do something towards that.
Right. To protect in that case, to protect your nest egg, because you're right. I mean, and the other
Yeah.
thing about, we're living longer, but not necessarily healthier is that, um, if that happens to you, you just don't know when it's going to happen or how big of
Right.
a problem it's going to be. It could be minor. You could slip and fall. That's pretty common. Break your hip, and you
Mm-hmm.
could, in one scenario, you recover completely and you're back to the way you were. In another scenario, you're forever different. And now you need more care than you did before. You just don't know. It's like one of
Right.
these, it's unpredictable. And that's kind of where insurance insures against the unpredictable. It's kind of what I was saying before, right? So
Mm-hmm.
it makes a lot of sense. Now, some insurance products, there's like, term life. There's some that have where you can own it. And I'm going to kind of stop there. But you and I have talked about you know, when it, how to think those through and when it makes sense. They get very confusing. Can you
Sure.
just sort of maybe scratch the surface on that? And because there's more, say, sophisticated insurance out there than term
Mhm.
life basic, the stuff that I know about.
Right,
Yeah.
right, right. So the beauty of term insurance is that we get a huge death benefit for a very small amount of money.
Hmm.
And it's a pure death benefit protection product.
Hmm.
If you pass away at this time, it's going to pay out to your heirs, and that's what we want for that time.
Hmm.
But as we go on, and as we're talking about career path, maybe this is someone who's now been in the practice for a while. Are those student loans paid off or getting paid off? Is the
Hmm.
practice note paid off or coming close?
Hmm.
Are you starting to have more of your cash flow that's coming into your pocket
Hmm.
rather than going to a bank or a student loan lender, right?
Right.
Here's where now we can add what I'm going to call a permanent policy.
Okay.
This is sometimes known as cash value policy. A lot of people just say, oh, whole life.
Hmm.
Well, just like Coca-Cola is a type of soda pop, cola beverage, right? Well, there's also Pepsi and RC and whatever else
Yeah.
there is, right? So this is
Yeah.
one type of permanent policy. And
Okay.
there's a number of types, and they all have their own bells and whistles and moving parts. And whole life is full of guarantees, but you pay for those guarantees. And on the other
Hmm.
end, you could strip down a policy to have no guarantees. Maybe that's what you want.
Hmm.
But there's different reasons to have the different kinds.
Hmm.
And I think that's where the confusion comes in.
Yeah.
And this is where I'm going to blame, my contemporaries and predecessors that sometimes the agent, the advisor falls in love with one certain type of policy.
Yeah.
And as they say, when your only tool is a hammer, the world is a nail.
Hmm.
Um, trying to make this thing fit into 20 different situations
Hmm.
when really maybe it does two or three things really well.
Yeah.
And we should look at 17, 18 different policies for the
Yeah.
other ones.
Right. I know where I struggle is it took me a while to arrive at sort of being able to articulate the struggle. It's like you start with what's my goal, right? You got to pick. I would like some amount of money at some age
Mm-hmm.
that I can live off of. Um, and then the next question, how am I going to get there? So you've got, an equity portfolio, you've got investments, you've got your home, you've got your net worth, some liquid, illiquid, et cetera, et cetera. And it seems like, insurance maybe has a place in there to accomplish the help accomplish the goal in the ways that the other assets don't do all that well.
Mm-hmm.
And so it, when added with the other ones, it together, you've got a good shot of making your number.
Right.
Is that, so what kind of role can it?
Perfect.
Okay,
Yes.
there you go. So yeah, I'll put on a Powers Financial Group sweater also, and I can sell your stuff.
I got one for you.
So what kind of role can insurance, maybe this is too broad of a question, but what kind of role can insurance fill in that, I'm looking to build an overall wealth plan,
Mm-hmm.
therefore insurance is really good at doing this in that towards that
Right.
plan.
Right. Right. And this is where we start to talk about maybe more of the cash value life insurance, permanent insurance. And what
Hmm.
does that mean? Instead of term that covers you for a specific period of time, a term of coverage,
Hmm.
permanent life insurance is designed to be there when you die. So
No matter when you die.
permanent coverage, right? So these things used to be priced out to age 100, and that was just unheard of. Then people started living to age 100 and beyond, and now they're priced out to age 120 if you want. And
Wow.
if medicine takes us there, we may have to reprice these even further. Who knows?
Hmm. Okay.
But this is where we're talking about a permanent life insurance policy, and it's also called cash value life insurance because there's two components. You have the death benefit,
Hmm.
and then you also have this little side account, and it's called cash value, and it is actually money that is held inside that policy.
Hmm.
that every time you pay a premium, a payment to the insurance company, some of it pays for the death benefits, some of it goes to the cash value.
Okay.
And then that cash value could grow. It could grow by a fixed interest rate. Um, in the world of whole life, we hear about dividends. So when the company, the insurance company is more profitable than maybe they expected, they pay a dividend. And of course, there's tons of companies that have paid a dividend for 100, plus years in a row, right?
Hmm.
So, maybe it's a fixed interest rate, maybe it's an interest rate tied to a stock index. And this
Ugh,
is
this
where,
is where it
right,
gets all,
this is
yeah,
where
just the
the eyes
confusion
start to roll.
proliferation goes crazy. Yeah.
Right, right. So as opposed to, so this is indexed universal life. Okay.
Hmm.
So indexed means that you are getting an interest rate that is tied to the return of an index, say a
Hmm.
popular index like the S&P 500.
Okay.
And it's going to have a floor, so you can't lose below a certain amount due
Hmm.
to market performance. To pay for that floor, there has to be a cap.
Yeah.
And that cap might be 6, 8, 10, 12%, who knows,
Hmm.
right? So in this situation, if the S&P last year started at 4,000 and it went to 4,800, give or take,
Hmm.
well, that's a 20% increase. So
Hmm.
you're indexed, you weren't invested in the S&P 500.
Hmm.
You're indexed, interest rate crediting would be tied. They would say, okay, the S&P did 20%, you were capped out at 10. So
Hmm.
here, you got 10% interest.
Right. But wait, I want to go back for a second. So there's this
Yeah.
cash account. So there's the death
Yeah,
benefit.
right.
There's this
I went into the
cash
weeds.
value.
Yes.
That's okay.
Yes.
So you can tap into that cash account while you're still alive. Is that
Right.
right?
Yes.
This is where I
And
get confused. Like it's all right. So keep
right.
going. I get confused.
Yes. Okay. Yeah. So let me back up. I was moving too far
That's
ahead.
okay.
So you have this cash value
Hmm.
that is inside this policy that is accessible to you.
Hmm.
And it's accessible via either a policy surrender. So you take out some cash value and they drop your death benefit accordingly.
Okay.
So just, I'm taking this portion out of the whole equation.
Hmm.
Or, a policy loan. And people say, well, why would I loan myself my own money? This
Right.
doesn't make sense. Well, these policies are designed that the loan interest rate is very low. Like
Like
we're
how
talking
low?
like 0.1%,
Okay.
maybe up to 2%.
And then you have to
But
pay it back.
maybe, right? This is where we get
Oh
into
my God. This, yeah, it's like,
endless
oh, yeah.
complications.
Yes.
So the idea here is that this cash value is growing tax-free. The policy loan can come out tax-free.
Hmm.
In certain states, it's creditor protected, and this is a huge issue for our medical dental professionals, right?
Oh,
if I get sued, what money can they touch? And this runs state by state with life insurance.
okay.
So is it creditor protected? So there's all these advantages built in.
Hmm.
And the idea is that if the loan rate that you're paying is less than the tax rate you would have paid, and for
Yeah.
these high income earners, it almost always is,
Hmm.
then this can be a viable strategy to grow another bucket of money
Hmm.
that you tap into as you need it. You need college tuition, you need to pay for a wedding, you're going to add on to your practice, you're going to retire, right?
Hmm.
This is all accessible to you, but you have to manage it.
Yeah.
So your question, do you have to pay it back? Not necessarily, but take out a loan when you're 40
Hmm.
and that loan just kind of sits there and grows. It's putting pressure on the policy. So the longer that loan sits out, the more you have to deal with it.
Okay. So it makes sense to pay it
So,
back.
so it can make sense to pay it back. A lot of times what we're doing is we're saying here, let's build this as a retirement asset.
Hmm.
And let's plan on taking money back out of this policy for 10, 20, 25 years towards the end of your life.
Hmm.
And, in that way, minimize some of the pressure on the policy,
Okay. And
right?
then if I'm getting into the weeds, stop me. But
Yeah,
so every time you take a loan, you are reducing the death benefit as well, right?
you could be reducing the death benefit. You certainly are on a surrender.
Is it possible to take out so much of the cash value that you've just sort of wiped away the death benefit?
Right. Yeah, absolutely. It's possible to take out so much of the cash value that the policy lapses.
Okay.
And now when the policy lapses, all of those loans and surrenders become taxable as gains.
Ew, so you don't want to
And
do
that's
that.
what we don't want to do. We were
Yeah,
trying to
yeah,
avoid taxes the whole time. So we have to be careful.
yeah,
But if we were building this, and this is where I'm going to talk about, maybe changing our mindset on this.
yeah.
When you want pure protection, you get that term policy because it's a lot of death benefit for a little bit of money.
Right.
If you're going to build this for accumulation, then what you want is the smallest amount of death benefit
Hmm.
and put in as much money as you can and
Because it
still
goes to the cash.
retain, because it goes to the cash value,
Hmm.
but still retaining the tax benefits of that life insurance policy.
Okay.
And so there's like the minimum amount that you have to put in to cover the death benefit, right?
Hmm.
And that's what the insurance company requires you. And then the tax code has a calculation that says this is the most you can put into this policy
Hmm.
and retain its tax-free benefits.
Hmm.
And I would say we want to be putting it right about here.
Just beneath. Yeah.
Leave us a little rounding error, but as close to that as possible. And now we're maximizing the cash accumulation in that policy.
Got it.
That's not a policy that we're depending on for death benefit.
Got it. Got it. Got it. Got it. Okay. I think I got it. See, it makes more sense to me.
Okay.
Okay. Is there anything, we could go on a long time for this, and
Sure.
we could go deep in the weeds. Um, but I feel like we've got like for me at least, like a good intro understanding. I've always struggled with when it comes to whole life, permanent life, cash value life, whatever.
Right.
There's just, and I think to your point earlier, a lot of it is just the way it's been presented and explained. Um,
Right.
but nevertheless, so in the interest of more so like bite-sized business advice, and I like how you tied it to you're a practice owner. What about the legal side? This is a way to sort of buttress against that. But in the spirit of more bite-sized advice, first wrap-up question I ask every guest is there anything you think I should have asked you, but I just didn't think to ask you?
Yeah, maybe I would bring up two things on this life insurance as a asset topic.
Okay.
Um, the first thing is there's tons of different policies.
Mm-hmm.
We want to make sure that the policy that you have fits your goal and is optimized for your goal.
Mm-hmm.
So, you know, that's not going to be one type of policy for every person for every situation.
Yeah.
And so that's a little bit difficult maybe for our medical dental professionals to be able to do on their own to say, is this the best policy for my situation?
Mm-hmm.
Is it designed to give me the most benefit and not just pay a huge commission?
Mm-hmm.
And so,
Yeah.
our doctors are really going to have to be careful. There's probably 15 variables in these illustrations, right? That big table of numbers that you've been given.
Mm-hmm.
15 little variables that we can manipulate to really juice up the numbers.
And I love
And
when other agents say, "So which one would you like?" And I stare and I go, "I have no idea. I don't know.
right,
I've
right.
I've never even seen any of
Yeah.
this. I don't know.
No,
You
it's
should be
crazy.
guide
Imagine,
me.
right.
I have no
Imagine a
idea.
surgeon said, "Hey, there's three ways we can go in and fix this. Which one do you want to do?"
Which one would you like?
Well, yeah, I don't know. I didn't
I
go to
have no
medical school,
freaking
right? No
clue. Are you
doctor would
kidding?
ever
Yeah,
do that. Right.
yeah. Well, he doesn't know
Right.
what he
No.
wants, so I don't really. Yeah,
Right.
it's a good point. Yeah.
Right. And then, so you're gonna have to find advisors who can confirm these things or help walk you through these things. And I might even suggest if you've been shown one of these policies by somebody, find somebody else, expect to pay them for their time and expertise, and ask them, what is this really?
Hmm.
And then for doctors who just say, well, I'm not a big fan of insurance, I don't believe insurance, they're never going to change their mind, right? People don't change their minds, they make new decisions based on new information. So I would say
Right.
come in with a more open mind,
Hmm.
listen to some of these ideas and topics. Don't be so closed off because they really can work for the policy owner, for our doctors,
Yeah.
if they're designed the right way.
Yeah. Yeah. Which is a good segue into the other question I asked, which is,
Mhm.
all right, we've caught some listeners' attention and they want to, I guess, wrestle this question to the ground for them. They want to take some action of some kind, but they don't know where to start. People can get
Yeah.
enthusiastic about things, but they're stuck at the starting line. They don't know where to start. Are there one or two things you'd recommend they do? And by start, I mean, I guess, figure out, should I be adding this? Should I be doing what Drew says or not? Where would you recommend? I have one, but I want to hear what you say first. What would you recommend they do to kind of get going?
Sure. Well, I mean, first of all, people can always contact me. That first call is at my expense.
Okay.
I'm happy to help your listeners at any time.
Okay.
Um, Second is, if you've already been shown this, if you've already purchased something, or if you've just been closed off to it completely, find somebody else who you can talk to about this and
Mm-hmm.
try to re-educate yourself. And
Mm-hmm.
in this way, I would say find somebody who is completely independent. This is what
Mm-hmm.
I've strived to do in my practice. The dirty little secret of financial services is you can hang your shingle and be doing business as whatever name you want, but then you really work for an insurance company
Mm-hmm.
and you're getting paid by that insurance company to sell that insurance company's products.
Mm-hmm.
And what's that insurance company's bias? And believe me,
Hammer and
they all
nail.
have one,
Hammer and
right?
nail all over again.
Hammer
Yeah.
and nail. So
Mm-hmm.
find somebody who doesn't work for an insurance company or for an investment company. Find somebody who is completely independent,
Mm-hmm.
who can shop the major carriers and who can, has some expertise in this to advise you
Yeah.
and help educate you.
Yeah. And I'll add to that, you know, it's not, I think of me, it's not my job to know the ins and outs of how all these different policies and investments work, but it is my job to have, an idea of what I said earlier, which is by age, whatever, I'd like to be able to retire and live on about, like I am today. And as best as I can tell, that means I need to have at least this much saved up and accessible. That's my job. The other part of my job is when I sit down with a Drew or anybody else and they start explaining things to me and it gets confusing, is to say, I don't understand what you mean. How does this
Mhm.
fit? And so what I like about Drew's profile is he touches all sorts of different investments. He's not an insurance guy who's really awesome at selling insurance. He's an investment advisor who also says, I can fit insurance into here. Let's see if it fits for you on top of all the other stuff that you're thinking about. Because it's one plan, right? That's where we
Right.
started. There's different types of assets you can own, whether it's stocks or bonds or whatever, insurance being one of them. And they should all fit harmoniously together to kind of on a soapbox here to help you hit that number by that age. And, anybody who's awesome at selling only insurance or only this or only that, or they don't have to sell it all, but they have to have like an informed point of view on it and be able to say, let me bring in so-and-so because I don't sell that, but they do. And together we are honest and, that's what you need. You got to know what your goal is because almost anything can help you get there if put together
Right.
properly. But if you don't know what your goal is, you might get lucky and hit it, but it's all it's going to be. So do yourself the favor and figure that out first before you talk to people. That's what I would say.
Yep.
It's not the easiest thing to
Sure.
do, but it's really important.
Right.
Any other thing that you might recommend that they do just to kind of, you know, doesn't have to be, but I wanted to give you the
Maybe
last
just
word.
even, yeah, no, even just a word like of caution. If you don't, everyone who's listening to this is usually the smartest person in the room,
Mm-hmm.
right? You've made it through medical and dental school, you've made it through residency and fellowship, and
Yeah.
if you can't understand what's going on in this, anything, investment or insurance policy,
Mm-hmm.
if you don't understand it or if you can't repeat it in a way that makes sense to you, then it hasn't been explained correctly.
Right.
I don't know what the old saying was, but like if you really know a topic well enough, you should be able to draw it on the back of a bar napkin,
Yeah. Teach
right?
it to other people. Yeah.
Yeah, everything we've talked about today, I could make a quick sketch on the back of a cocktail napkin, and I think
Mm-hmm.
people would understand how it
Mm-hmm.
works.
Mm-hmm.
And so have an understanding. Don't go into it saying, well, I kind of get it. And I like Drew and I kind of get it, so I'll just do it.
Yeah.
Well, don't do
Yeah.
that. Keep
Yeah.
asking questions until you understand.
Yeah. And just because you're the smartest in the room doesn't mean you are omnipotent or the fastest learner on every topic that crosses your desk. It just
Right,
doesn't work that way. So give yourself
right.
a break.
Yeah.
Cool. This is great. Drew, thank you. Every time I talk to you, I learn a bit more. I don't know. It's so funny that a life insurance policy could pay you some money before you die, but here we are. You've demystified that one. So there you go. But I get it now. And so, yeah, so we're going to put all the contact information that you provided into the show notes for your episode, this episode. So anybody who wants to reach out to you, they now have another way of doing so. So thank you very much for coming on and sharing your insights. I appreciate it.
Yeah, thanks for having me, Carl. Appreciate it. Love seeing you.
You too. And a couple of other points before we wrap up. If you're someone like Drew or I and you serve private practice owners, or if you're a private practice owner yourself, either way, if you've got experience, expertise on the business side of private practice that you think other private practice owners would benefit from, please tell us so that we can get you scheduled as soon as possible. In Drew's show notes, every episode show notes, there's a link, a couple of clicks that lets you do that. Finally, we do a new episode every week here on Practice Care. The easiest way to stay up to date is to subscribe to Practice Care. Just search Practice Care, one word, anywhere, and you will find us. We're on Apple, Spotify, I say Google Podcasts, but that's going away. YouTube as well, pretty much every player and platform, easy to find. Subscribe so you can stay up to date. Thanks very much, and until next time.